What's up, everybody? Welcome to another edition of This Week in Crypto with Santiment. I'm your host, Brian, alongside my co-host, Dino. We have a ton to go over. Obviously, another solid week for the markets with Bitcoin up 16%, Ethereum up 11% over the past week. Before we jump into how that occurred, why altcoins are fluctuating the way they are, and what we might be expecting next, I just want to remind everyone, as always, whether you're new or old, our goal here is to provide context into what is happening with the on-chain and social data on Santiment based on historical evidence that we've seen in the past. This is in no means intended to be investment advice, and we will go with the structure that we normally do, which is pointing out the divergences we're seeing without providing any advice of any kind. So please avoid asking us things like when moon, all of the usual stuff that you might expect on some other channels. It's not what we do here. That being said, tons to go over here. You guys may notice that our cameras are off. We're kind of messing with some settings. We're dealing with a bit of a technical malfunction at the moment, but our audio should still be coming in loud and clear. If for some reason we drop off or you can't hear us at any time, just quickly let us know in the chat and we will take care of it. So
if anybody in chat that's already here, I'm just sharing the links to the stream right now because we've been having a few weirdness issues with Streamlabs. If anybody in chat can just let me know, number one, you can hear both me and Brian loud and clear, and number two, the screen is like in high resolution. Those are the things that we need for the stream. Our faces, although beautiful as they are, they're not necessary every week. So as long as we have good audio and good screen sharing, we can go on with the stream. All right, we got kind of quick saying I can hear with clarity. All right, that's all we need, Brian. I'm gonna start sharing links to the stream, and you can already get us going.
Yeah, perfect. So as usual, we're starting here with the 7-day screener. This shows essentially the top 100 assets in crypto and what their 7-day price percent changes. We can see here with Bitcoin up still above 54. I think it's around 54.4% K in real time. Ethereum is just a tick above 3,600 at the moment. And then we can see a lot of variation in altcoin returns, most of which have done quite well. Obviously, Shiba was the big story over the past week, kind of the alternative meme coin, if you will, to Dogecoin. It's absolutely blasted off. If we look here at our social trends tool, we can see that it's atop the trending words here and has been essentially all week, at least since Monday when it really started to take off. And generally speaking, for those who have not seen the power of this social trends tool before, typically in our study, when a coin hits a top 3 position on social trends, there is on average around a 12% decline over the next 2 to 3 weeks or so. That being said, we're certainly seeing an anomaly right now with Shiba up 264% in the past week. And with it being in the top position for the last few days here, it will be interesting when the correction begins.
Well, obviously, I think it began, Brian. I think it's down like 25 to 30% today.
Yeah, but relatively speaking, I mean, it's hard to really even call that a correction. I mean, up 264%. When you see a 25 to 30% retracement, yes, that's a big chunk of the gains that we just saw, but there might still be some volatility going on. In the meantime, there have been plenty of times where we've seen this correction just over the past 24 to 48 hours, I should say, where it started to bounce back up again. We saw some fluctuations, but inevitably, if you're looking long term, this is generally a sign that a correction is beginning, as Dina is mentioning here, and we'll have to watch and see how it plays out, see how long it stays in the top 3 here, which would equate to our study here, implying that there will be a more long-term correction. So for now, as Dino said, we're in a current retracement period for Shiba, but we might go over a few metrics toward the end of the call. We'll have to see, but we do want to focus mostly on Bitcoin and Ethereum, with Bitcoin especially having some of its price dominance really show here, especially in the early half of the week. A lot of eyes and minds have been on the top coin in crypto. So starting here with our circulation, Dino, maybe we can talk a little bit about what we've seen in terms of unique tokens and unique addresses that have been kind of ticking up over the past week here.
Yes, please. Actually, I think this is, to me, one of the most interesting and hopeful signs for Bitcoin, at least in the next week or so. So I think even more interesting than starting with circulation. Obviously, circulation is, for those of you that are not familiar with what it is, first of all, it's just the amount of unique Bitcoin, units of Bitcoin that are moving on a daily basis. So what we can see is that if you cut out that solitary spike back in July, we are at the highest level in terms of Bitcoin circulation since the end of May, which was actually a capitulation spike rather than anything positive, right? So in general, we seem to be experiencing an inflow of fresh blood and fresh activity on the Bitcoin network. This is similar to what we have seen, Brian. If you zoom out a little bit and you go back to, like, I think October and November of last year, you will see a similar uptick in the circulation of Bitcoin at the beginning of the 2021 rally. There we go, right there. So that first part, zoom out a little bit more. So from, let's say, like, I don't know, July 2020 or something, just so we can see where it really okay, even 2 years is good. There we go. So, and then there we go. So we can see between the sort of October and December, there has been a clear sort of uptick in circulation. That was the first sort of stretch of Bitcoin's elevated network activity, which coincided with Bitcoin at that point, I think, breaking 15K and then breaking 20K. So we are seeing in general the rise in the amount of value transfer, daily value transfer on the Bitcoin network, which I personally think is specifically or especially because this growth is so organic. It's been happening for almost 2 months. It's not something that happened for a day or two and then disappeared. I think this is a fairly positive sign for Bitcoin moving forward. And one of, I think, Brian, your models is telling us that precisely, which is the NVT model, essentially a metric that what it tries to do is it shows the dynamic or the relationship between Bitcoin's market cap and the amount of Bitcoin moving on the blockchain. So the idea behind this metric, and you can see already that there's a green bar for the first time in like 5 months. So the idea behind this metric is if Bitcoin's market cap is high, but the amount of coins moving on the network on a daily basis is low, or the amount of value basically being transferred on the network is low, then the NVT is going to show a red bar, suggesting that we might be overvalued or the market valuation of Bitcoin is too high relative to just the daily amount of value transfer on the network. We're just not seeing, fundamentally sound activity to justify rising prices. However, right now, for the first time really since the correction, we are seeing, I think that's on a sample size of just a week or so, but we are seeing that even though Bitcoin is rising in price, the token circulation is rising even faster to the point that NVT ratio is actually green, suggesting that we are in a period where market cap or market valuation of Bitcoin is fully justified, at least in terms of the amount of activity on the Bitcoin network. Is that right, Brian?
That's exactly right. And as Dino mentioned, this is a sample size of 1 week so far. So the further into October we get, the more clarity and confidence this bullish bar will have. Typically, this model will foreshadow the following month's price direction, right? We got a first red bar here in March, and the all-time high actually happened in April. But if you look at the average price between March and April by just combining all of the average days, we did get that retracement right on cue with when this first red bar foreshadowed the next month. And with that, we had some volatility. We had the big downtrend on after the second month of the red bar. It continued. We were able to climb despite token circulation being red, but there was a lot of volatility going on in here. So it was kind of a iffy climb back to 47. I think it got to 50K at one point, in September here at the high price. But with that, a lot of FOMO started and allowed the circulation to turn back green, But like I said, this is only 1 week of data through October. So far, so good. We're seeing very good circulation, a lot of unique tokens that hadn't been moving around during this 7-month stretch now is, and that's a very good thing. So
I mean, I don't want to go deep into some of our more complicated metrics, maybe, but I did want to point out some people in the stream might be familiar with our mean dollar invested age metric, and I was checking it before the stream, and I found something that seems very interesting. The fact being that over the last couple of days, we have seen mean dollar invested age dip for the first time in quite a while. So what that means essentially is that when you see to calculate is it tries to calculate the average amount of days that all units of Bitcoin or all Bitcoin tokens have stayed in their current addresses, adjusted by their acquisition price. So very sort of simply put, when we see a rising slopes in Bitcoin's mean dollar invested age, that means that on average, units of Bitcoin are getting older on the blockchain. By getting older, I simply mean they are not being transacted between addresses. The network is moving towards dormancy. So from a sort of fundamental perspective, there's going to be less and less value transferred on the daily basis. And as a result, there's going to be less of a fundamental justification for a rally. And then when you see a decline, like we have seen sort of, Brian is showing here between sort of October and December, really, a major decline in Bitcoin's mean dollar invested age, that points to the average age of units of Bitcoin declining on the network, meaning that we are seeing a growth and explosion in network activity. And this is generally what happened sort of in the middle of the rally. We can look back into 2019, 2017. Each of those rallies have coincided with this decline in mean dollar invested age, and the moment that we see mean dollar invested age start to move upward is the moment that we might want to be a little bit concerned. And so for the last couple of months, mean dollar invested age has been trying or sort of moving in an upward direction, which from a sort of mid to long term perspective, because this is a macro indicator, is a little bit concerning, because it means basically what we've been saying a minute ago. It means that the amount of interaction with the Bitcoin network is lagging behind the price. So the fact that if you zoom in for like in the last week or so, the fact that mean dollar invested age is finally starting to not just flatten out, but actually dip a little bit. It's very early. It's just been a couple of days. But this is a sort of a direct response to the general circulation of Bitcoin moving in the right direction. So another sort of, if you look at mean dollar invested age in particular for Bitcoin, there we go. Last couple of days, basically since we've started to break that 55K or retest the 55K mark, we have seen not just a flattening of Bitcoin's MDIA, but also a decline. Early, but I would keep an eye on it. So let's talk about one more thing about Bitcoin's sort of general network activity. And I actually wanted to put this in the thumbnail, but decided maybe circulation is more interesting. Daily active addresses, Brian, for Bitcoin. Today, breaking 1.14 million. It is the highest amount of addresses interacting with Bitcoin since May. It is a very strong signal that there's a heightened interest and demand. Actually, 1.16 if you zoom in. So I was 200,000 addresses wrong, which is even better. Actually, 20,000 addresses. But
still
in general,
a massive number, though. Yeah.
Massive number. It was, I think, for a while we have struggled to not just reach 1.110, but to reach 1 million daily active addresses. We have struggled for months. If you look at the last, let's just zoom out to the last year of data, and you'll see how strong this latest uptick in Bitcoin's daily activity is. So yeah, after the correction, before the correction, we have sort of tinkered between 1.05 to 1.30 million daily active addresses. It was a standard for the amount of interest and demand for the Bitcoin token as expressed through on-chain data. We have struggled to reach those levels for essentially 4 months. Now, for the first time in quite a while, we are starting to mirror the levels of activity that we have seen back in March, April, and May. So this is, once again, I think it's too early to tell whether this is going to continue. It has been for a couple of months now, which is good. But first of all, over the weekend, this is inevitably going to drop because every weekend Bitcoin's on-chain activity goes through a slump. The most interesting thing is going to be what happens early next week. So do we start with a very strong showing from the network activity perspective, both in terms of token circulation and daily active addresses, or do we start to retrace? In general, though, I think this is a cautiously optimistic sign. It's still early, of course, but Bitcoin is doing the right things, at least. So what I would be very concerned with is seeing 55K and seeing daily active addresses move back into 950 and 800,000 range, because that would suggest that there's a bearish divergence between the price and market valuation of Bitcoin on the one hand and the amount of demand for Bitcoin in the other. So at the very least for now, we are seeing a strong showing on the network-wide level for BTC. And yeah, don't want to be too excited or too bullish, but it's nice to see Bitcoin recover in terms of these metrics. There are some that are a bit more concerning, but I think network level, this is where we should be and where we need to be for 60K and above.
Mm-hmm. Yeah, it's obviously a good sign if you're a Bitcoin bull right now that our address activity is hitting marks that we haven't seen since mid-May. That being said, it would be an even stronger indicator if this kind of rise was happening in active addresses while prices were staying flat. As it stands now, the price has essentially kept up with the rise of address activity. So like this temporary dip right here, after we see a spike like this right before it, that would tell us that if there is a dip going on, it may not be lasting for long, especially when the overall trend in address activity is growing. So there are some mini bullish and bearish divergences that have shown here over the past couple months. But it's difficult to say right now from here where we'll be going, because this is essentially kind of essentially a neutral divergence right now, because both price and address activity are moving up together as it's supposed to. Just as price was declining, as address activity was declining as it was supposed to. So look for things that will kind of show some separation between address activity and price. If you're looking for this as a leading indicator, which it very much is, we think that address activity and circulation are two of the best leading indicators. And when there's a rise in those without the price rising, those are the kind of things to capitalize on and feel confident that the price will soon move toward the direction that these two key on-chain indicators are pointing to.
So moving, I think, to a few other very important signals for Bitcoin. I think before moving into MVRV, which I think is a little bit concerning, a good segue would be to also just examine what the crowd reaction to this breakout has been, because it's been very interesting, at least from what I've been seeing. Brian is showing here the weighted social sentiment for Bitcoin. Essentially, this metric tries to calculate the average bias of retail traders as captured by our social listening. So essentially what we do is we track data from about 1,500 different crypto-related channels, Telegram, Reddit, Twitter, other channels as well. And on a daily basis, we collect hundreds and thousands of messages from these channels. And so our machine learning algorithm parses these messages, labels them as positive or negative or ambivalent, and then we can sort of see what is the average crowd bias or crowd mood towards a particular coin. So one thing that we have seen, which was kind of interesting over the last couple of days really, is as Bitcoin has started to rise, we have seen an uptick in the bullish sentiment. Obviously, this was a couple of days ago now, but really maybe until October 6th, there was a clear rise in the average sentiment towards Bitcoin right there. So this price chart is sort of pretty smoothed out. So what we don't see is that on October 6th, we have had a mini correction, just a small blimp where we went from 55K all the way down to almost 53.9. So Bitcoin has already sort of slightly corrected there before we were able to break slightly higher today to 55.6K. And in the meantime, what I find relatively hopeful as well, the average sentiment towards Bitcoin has started to decline once again. So for those of you that are not familiar with how we generally read these metrics, historically speaking, extremely high sentiment or positive sentiment has not necessarily been a great friend, not just to Bitcoin, but to cryptocurrencies in general. So what that usually points to is the crowd being a little bit or becoming a little bit too excited, irrationally greedy and irrationally confident about a coin's potential. And this is usually the time where market corrections, short-term and long-term start to occur. So we have seen, for example, the last time that Bitcoin had a similar spike in bullish sentiment was right after the correction there in mid-September, where there was a pretty significant spike in bullish sentiment. A lot of people thought, okay, this was going to be a short-term correction. It might be a good time to. We actually had another week of consolidation and actually a lower price low before we were able to recover. And in the meantime, the crowd sentiment went into a predominantly bearish territory. And this is what I wrote about in the weekly report. If you go back on Monday, I wrote about the fact that Bitcoin sentiment was, relatively low for a couple of weeks now, and that might, from a social perspective, be a good position for BTC to start breaking out. So long story short, what I would not like to see is I would not like to see Bitcoin-related sentiment and other Bitcoin-related social metrics that we have, mainly social volume and social dominance. I would not like to see these metrics start moving in the upward direction or the positive direction, because what that would suggest is, number one, a lot of people are starting to pay attention to Bitcoin, and number two, a lot of people are very excited about Bitcoin. Those two combined are usually a relatively significant indicator of upcoming price tops. So at least for now, it's a good sign to see Bitcoin sentiment start to dip a little bit, suggesting that 55K is a relatively strong resistance. So some people might think that we need a short-term correction before we can maybe push forward, right? So that's one. And Brian, if you also look at social volume and social dominance for Bitcoin, what's interesting is that it has also been declining, specifically social dominance. There we go. So social dominance is essentially what it does is it tracks the amount of mentions of Bitcoin compared to the mentions of other top 100 coins by market cap. So as you can see, since the September correction, the social dominance of Bitcoin has been in, I don't want to say free fall, but it's definitely been moving in the downward direction. Even though social volume for Bitcoin has been picking up in the last couple of days, the relative amount of talks about Bitcoin have been still declining. So that means that, yes, there has been an increased interest for Bitcoin over the last maybe 72 hours, which is to be expected. But other market narratives are still more interesting to a lot of people. For example, today I see a lot of people talking about Shiba. I see a lot of people talking about Tether and the potential FUD around Tether, which seems to come around every year or so. So there are other stories and narratives that for the time being seem to be taking the attention away a little bit from Bitcoin. So also a fairly cautiously optimistic signal, right? What I would keep an eye on over the weekend and after this call is what happens with these metrics. Like if Bitcoin holds at 55K or it has a strong breakout above 55K, I think it's only a matter of time before these metrics start to rise once again. Social dominance is probably going to go through the roof. Social sentiment at some point has to go through the roof. When that happens, it's probably it can be a time to reconsider a BTC position, at least for the short term, because there might be a need for short-term price normalization, Brian.
Yep. As most of you know, crypto markets are a very sentiment-driven market, and obviously for good reason. There are no company backings behind coin price fluctuations like you would see in a traditional stock market, no PE ratios, debt-to-equity ratios, and things like that would allow you to objectively measure the health of a company, right? That's why we have these on-chain and social metrics. And essentially, these social metrics are sort of the equivalent to PE ratio in a sense, where we will see when the crowd begins to get too overly hyped about something, and that will often be stamped as a price direction indicator or a foreshadower, if you will. So when we see really high marks like this that go on, especially in clumps like they did at the beginning of the year, that's when we see a correction. When you see disinterest, it will often also indicate that something is about to change. So it's all about extremes with social dominance, I've found. And when you see these spikes here or lack of interest spikes here, those are the ones that are really going to signal that some portfolio movement can be justified. Right now, we're seeing this minor decline, as Dino said, in social dominance as the price rises. So even as price dominance goes up for Bitcoin, because at least for the first half of the week, a lot of altcoins were really lagging behind. But despite that, dominance was going down. That can be a good sign for Bitcoin because of the fact that the crowd is not getting as interested in this rise as they should or could be. And when the crowd is not FOMOing in, that's the whale's opportunity to continue to push the price up without much real resistance. And when you do see the FOMO, like we saw with Shiba, that's the sign that a 25 to 30% correction can occur. Obviously, with Bitcoin, things are a bit less volatile, and 25 to 30% is extreme for a coin like Bitcoin or Ethereum. But regardless, what we're seeing here for Bitcoin is applicable to any of the assets that you can check out on Sandbase. Look for these huge spikes in volume and dominance as an indication that the crowd is starting to recognize the pattern that is happening. It'll usually happen on a price rise, but can also happen on a price dip, like we saw back here in June, July. So very interesting, Dino, what we're seeing with social metrics at this time.
Yeah, for now it seems like still a little bit. It seems like it's given us a little bit of room to grow. I think I would be remiss if I didn't talk about a few concerning signals, because it's not all roses. So let's talk about two that I think people should keep an eye on. Number one should be funding rates. So if we look at Binance funding rate, specifically, we will see an uptick over the last maybe 48 to 72 hours. Essentially, the funding rate is a fee paid by one side of the perpetual contract to another. What that means is that when funding rates are high, that means that on average, longs are paying Bitcoin shorts. So the derivative market is bullish on average, and then vice versa. If the funding rate is fairly low, that means that on average, Bitcoin shorts are paying Bitcoin longs, and the market is more decisively, at least, bearish on average. So it's no surprise to see funding rates start to increase over the last couple of days. They have been on Binance, that have been on OKX and Huobi as well. Now on Huobi and OKX and even Bybit and FTX, those funding rates have started to decline a little bit. So it seems like, after the yesterday's correction, it seems like the longs have been spooked at least just a little bit. I mean, I say correction, just a minor dip. But it's still a sign, and historically, it's also been a relatively decent sign that the market is becoming similar to social sentiment, is becoming a little bit too greedy and starting to believe in Bitcoin a bit too much. Like if you look at the period between December and May, several of these large spikes in Bitcoin's funding rates have coincided with periods of upcoming price corrections in both the all-time high and several all-time highs before that, right? And even in September, we have seen sort of a spike in funding rates approaching that short-term correction a month-long correction, really, that has happened afterwards. So funding rates are starting to pick up. They're not super high just yet, but they are an indicator that the particular segment of the market is becoming a little bit too bullish, and there might be a reason or more incentive for shorts to take offensive. So that's one thing. The second thing that I do feel we need to talk about is Bitcoin's MVRV ratio, because it's now moved into that danger zone. Last couple of weeks, really since like maybe the beginning of September, we have talked about the fact that Bitcoin's MVRV ratio is pretty low. Actually, Brian, let's look at the intraday MVRV ratio, because it shows, I think, more clearly where we are right now, because I think we're now at about like 13 to 15%, last I checked. So for those that are not familiar with what this metric shows, what this metric essentially calculates is the average profits or average losses of all addresses that have acquired Bitcoin at a certain in a certain time frame. So for example, the 30-day MVRV ratio, which we are looking at right now, tracks the average profits of all addresses that have acquired Bitcoin in the previous 30 days. So we're looking at average profits based on on-chain data, so there are some assumptions, but the average profits of all short-term or swing Bitcoin traders. Currently, they're at about 11.9%, but they have, I think, Brian, yesterday or the day before, peaked at somewhere around like 16%, I believe. Yeah, 16.4.
Yeah, 16.5.
Yeah, so let's look at, like, just show us last 3 years of data for Bitcoin's 30-day MVRV so we can compare it. Because generally speaking, what this metric usually does, or how people use it, is that the higher the MVRV ratio is, the more unrealized profits there are by that particular category of holders, and therefore the more likely it is that they're going to start claiming those profits, and they're going to start dumping on the market, and so there might be an elevation in sell side pressure, right? And then vice versa, the lower the MVRV ratio is, according to this metric at least, the more opportune time it could be to accumulate Bitcoin. So people look into historical peaks and historical valleys for MVRV ratio to see how much we are sort of removed from danger zones and opportunity zones. So I talk a lot about the fact that Bitcoin's 30-day MVRV ratio has a propensity to peak between 15 and 20%. So Brian, if you can, put us at a 15%. That's 11. Yep. So
oh, that's weird. I just had it at 15.
Higher.
I think the axis may have just changed. 15 is here.
Yeah. So look at that line. There seems to be a fairly consistent trend. There are a few outliers, but if you look at the amount of time that Bitcoin's MVRV ratio in the last 3 years has kept above 15 and 20%, it has never been more than a couple of days. So that already, when we reach that level, historically at least speaking, it points to the fact that Bitcoin might be a little bit too overvalued. And there might be a need for MVRV ratio to normalize, because there's a lot of people sitting on profits and they like to take profits at these margins, right? So the fact that we have already sort of hit around 16% on October 6th, and then we dropped to 43.9K, that already sort of puts that once again sort of confirms that historical resistance point. So now we've dropped a little bit to 11.4%. I would still be wary. Any sort of move upward for Bitcoin is once again going to propel us into that 15 and 20% category. And as a result, now I'm not saying that we're immediately sort of in risk of short-term correction. If you look at December and March of 2021, there have been periods where Bitcoin's MVRV ratio has sort of soared above 15 and 20%, but that only lasted for several days to a week tops. So in general, once we reach these levels, it points to an upcoming short-term correction at the very least. So that's one thing that I think is, even though Bitcoin's on-chain activity is now soaring, there might be sort of an excess of sell-side pressure in the next couple of days and weeks, especially if Bitcoin continues to move in the upward direction. So that's a danger zone that I would keep an eye on. And then finally, Brian, because we're already 35 minutes in, before we talk about whales, you can already load them up. But guys, let us know in chat what coins you would like us to analyze. So we don't have cameras today, but that doesn't mean that we're gonna skip chat Q&A. Any type of coins that you are interested in, there's a lot of very interesting stuff happening on the market right now. So if you have questions about a specific asset that you are maybe looking into, let us know, and we can do some quick analysis during the stream, look at their on-chain data, social data, development activity data, to see at least what they're showing short term. Bonus points if the coins that you would like us to analyze live on Ethereum, because basically at this moment, we have on-chain data for Bitcoin, all Ethereum-based coins, XRP, Litecoin, and Binance coin. So if you want us to analyze a coin from an on-chain perspective, it needs to fit into one of these sort of criterias. If not, like for example, if you want us to analyze something like, I don't know, Dogecoin or Polkadot or Solana, something that doesn't exist on these blockchains, we can still look at it from social data perspective, development activity perspective, but we can look at stuff like active addresses, whales, exchange metrics, and stuff like that. So anyway, Brian, last thing, that I wanted to show, and you're already showing it here, is the behavior of the 100 of two groups combined. So groups holding between 100 Bitcoin and 10,000 Bitcoin. So it's quite a range, but I think it's a decent overview of the large Bitcoin holders and the behavior of large Bitcoin holders over time. So I think we can, if we can only keep the 100 to 10,000 coin band, because the other two are largely sort of moving in contrast to one another.
Yeah, the only thing before I get rid of it, I just want to note that the reason we like these two lines, the red and yellow here, red being 100 to 1,000 and 1,000 to 10,000, is because the price of Bitcoin usually seems to alternate between what the two are doing. Obviously, following the yellow line very closely here, following the red line, the 100 to 1,000 traders here. So I'm going to get rid of them now because the pink is the average between the two. Just wanted to point that out, that it's been following the 100 to 1,000 as of late.
There we go.
So now we're looking at the average line. Go right ahead, Dino.
Yeah, so this one essentially shows the total amount of Bitcoin held by addresses holding between 100 and 10,000 Bitcoin over the last, like 6 months, right? So this is as a percentage, this is the holdings of these addresses as a percentage of Bitcoin's total circulating supply. So essentially what we're seeing that they currently hold 49.2%, or almost a half of Bitcoin's total circulating supply is held in these addresses. So for the past 2 weeks, really, the behavior of these holders has been relatively flat. They have not made any significant moves, which I was fairly surprised by, given the fact that Bitcoin's price has started to recover and then some over the last 2 to 3 weeks. However, really in the last couple of days, we are seeing sort of the first signs, although relatively small, but still, I think it's at least worth noting because a lot of people are looking into whale activity. We are seeing slow signs of further accumulation by these addresses. So over the last week, there has been around 15,000 BTC added to these addresses combined. That might not seem like a massive number, but at the very least, we are not seeing sort of a decided effort to offload some of the holdings of the whales are not looking to offload their bags just yet. In fact, we are seeing the opposite trend, slight accumulation over the last week of data. Obviously, personally, I would like to see it even more aggressively. This chart moving in an upward direction even more aggressively. For now, it's not, though. At the very least, I think it's worth noting that there is a little bit of an uptick over the last couple of days. Keep an eye on it. I think moving forward, especially as we approach 60K, I think we might have to see some support from these large addresses if we're really sort of serious about trying to retest the all-time high and break into a new all-time high. For now, we're not really seeing massive strength, but maybe early signs of confidence as well over the last couple of days, Brian.
Yeah, and it's worth noting too, we reported recently, this was actually the largest day of accumulation, about 70,000 coins in just 24 hours in almost 3 years. This was a huge move, and it happened when we were kind of bottoming out. And the reason this metric has such great leading properties is prices don't usually move, especially on Bitcoin, in tandem with like 1 day of movement, right? You can see that the move was made by these whales on September 25th to 26th. And then we had a few more days. It wasn't until about the 30th where the price started to take off and follow the lead of what these whales were doing with their accumulation. So as said, over the past week, almost week and a half, we've been flat. But the big signal, if you were watching these whales and their movement, happened about, give or take, 2 weeks ago, when we were kind of at this panic point in the markets where a lot of people were saying, all right, that was the dip. It didn't come back up right away, and so people said, okay, I guess it wasn't the dip, and we're just going to wait for 35,000 or 30,000 again. And obviously, and the whales quickly pounced on just this small dip when we got to like the 42, 41 range, and that's why this supply distribution metric here is such a powerful one, especially if you're following the right tiers for the respective asset you're looking at.
Right. So that 26th September spike also needs to be noted that there has been a large internal transfer between Huobi wallets on that day, which is going to impact this chart. So it's not just whales. It has also been afterwards sort of revealed or sort of analyzed that there has been a fairly significant inflow of funds from one previously unknown Huobi wallet to another. So that seems to be also what impacted it. But even with that being said, I think overall the trend has been, especially the last couple of days, really has been upward. So something at least to keep in mind. All right, we're about.
And there was still plenty of movement before that too. So yeah, go ahead.
Sorry. Yeah. So we're about 42, 45 minutes in. I think we can already start to look at a few other coins. I see a few of them. Let's start with XRP because I'm not seeing any sort of consensus right now. So let's start with XRP, and then we can look into a few other coins that the chat here is asking for. The reason why I want to look into XRP specifically is because of its daily active addresses. Like, yeah, we can look into some other metrics as well. But what I've been looking at this entire week and I've been mesmerized by is this uptick in on-chain activity for XRP. So let's zoom out a little bit, Brian, so we can put into perspective just how big this spike in XRP's daily active addresses are. It's massive. Actually, if you zoom out to all time, we are nearing that level of activity. Let's zoom out. Yeah, so there was one outlier here in I think late 2019, which I think might be a bug. I'm not sure, but if we assume that's an outlier and it's not correct, or there was actually at that point maybe some massive there was something that happened early 2020 that I think might have explained this massive spike in the middle of the chart. But anyway. Obviously, that's an outlier, right? So if you look at 2017 and the peak of the Ripple here, 2018, peak of Ripple's price action, late 2017, early 2018. That was about, so we're looking at the 7-day interval for daily active addresses, Brian. Let's look at the 1-day interval just to try to figure out exactly how many addresses there were at that point, and then compare it to the last 24 hours. So where were we in 2017? We were at, I mean at the all-time high.
Gotcha, right there.
No, sorry, the price all-time high back in
late, got it, yeah.
So we were at
So
60,
we were looking at 62, 63, yeah.
Right, so where are we like today and yesterday? Where were we?
So the latest was about 45.8 yesterday.
And then the day before, I think there was even higher. I think you can zoom in now too, so we can see.
Yeah, it's a little too granular.
Yeah,
Go a little more. Oh, I need to get out of full screen. I'll just go last year.
Sure.
So yesterday we were at 49. Okay, the day before was 72.9K.
And I think that's also not sustainable. But even if we take that as a clear outlier, we're at sort of 49,000 addresses. It's massive. So I don't know. I'll be honest. I don't know why this is happening. There doesn't seem to be a clear reason, like there doesn't seem to be a clear sign of network manipulation. So this rise in daily active addresses has been happening under the radar for like 2 months, and this is why I like this metric particularly, because it's not a one-off. If you hold shift and you take the period between maybe from the bottom to now, how many times, or sort of what was the total percentage spike in daily active addresses between the bottom in July and now. So that's
218,
yeah. So 218% daily active addresses, 101% increase in price. So relative to the price, daily active addresses have actually been kicking ass for XRP. So I know there's a lot of still FUD, or actually there's a fair bit of, as far as I've been reading, a fair bit of optimism towards XRP and Ripple and their sort of clash with the SEC. Either way, on a network level, we are seeing a fairly interesting uptick in on-chain activity for XRP. So generally speaking, and I say this for Bitcoin, I say this for Ethereum, historically speaking, as a rule of thumb, strong price rallies coincide or go hand in hand with sustainable upticks in network activity, which some analysts use as sort of a proxy, on-chain proxy for token demand. So right now, and really for the last couple of months, we have been seeing the amount of XRP addresses start to pick up very slowly but surely. Like, it's not, if you look at April, that all-time high, not all-time high, sorry, if you look at that local top here in April, it wasn't like it was a very swift spike in daily active addresses, and a lot of it was addresses looking to sell off their XRP, right? Because it was sort of tied to XRP's price action. Currently, the price of XRP isn't doing anything crazy. It's actually, kind of boring, relatively speaking, right? Even with that relative boringness of XRP's price action, so I'm not sure just yet. I've been looking into it the last couple of days. I haven't delved deep into to figure out whether there's any specific reason, but from a general perspective, I think I always love seeing spikes in consistent spikes in network activity. So Brian, maybe we can look at, I don't know, social data as well, just to see where XRP is in terms of crowd mind share. Like, are people talking about it more? Are people excited about XRP? What's been going on? So quite low, right? So social volume has actually been, we're seeing a little bit of a divergence between the price of XRP and its current social interest. The last spike, right around that top there, this is something that we see quite often. Spikes in social volume, when they happen during periods of price appreciation, they tend to suggest that we might be looking at a short-term correction. So let's also look at social dominance, right? So what is the amount of interest in XRP on social media, at least the channels that we track, relative to other top 100 coins? And the answer is, I think it's relatively low, right? Around
not
1%.
Much at all.
Yeah. Okay, let's look at social sentiment as well, just to sort of round up our social data. I think I've seen it today already, and it was low, slightly bearish. So I wonder if it's changed in the last couple of hours. No, it's still low. So generally speaking, Ripple sentiment has been fairly bearish. The amount of interest in Ripple has been relatively low. The mind share of Ripple compared to other coins on crypto social media has been low as well. I think that's no surprise. I haven't seen anyone really, like, on a market level, talk about XRP in any sort of major way. They're too busy creating coins with Elon Musk's dog's name and picture on it to talk about anything else. But generally speaking, I think this is a hopeful sign. Obviously, there's no guarantee, but it's looking like a decent setup. Like, if you look at previous spikes in social sentiment for Ripple, one that happened back in May, one that happened right there in September as well, there have been, generally speaking, periods where spikes in bullish sentiment towards Ripple have coincided with either like short-term corrections or sometimes long-term corrections as well. So currently, we are not seeing any sort of elevated interest or chatter towards XRP whatsoever, allowing it to flow under the radar a little bit while its network activity is growing. I'm not sure whether that network activity spike is legit. I'm being honest, I don't have all the answers. I have not found a particularly decent reason to expect that this is wrong or that somebody's trying to manipulate the XRP network. So if it is legitimate, it's looking nice. One other thing that we might want to look into, Brian, is XRP's MVRV as well, because I think a lot of coins are now experiencing a pretty significant uptick in the average profit of their traders. So we might be looking into a period of short-term correction from that perspective. So let's see where we are. All right, so that's the 30-day MVRV ratio. And can you draw a line for where we are right now? Yeah, just to see, generally speaking, over the last 3 years.
As in 15% or so?
No, just where we are right now. So that's what, 6%?
Oh, got it. Yeah, we're right there.
So we're at about +5, +6% in terms of the average profits of short-term XRP holders are 6.3%. So the question that you need to ask yourself is, do you believe that +6% on average is enough returns for short-term XRP traders, for swing XRP traders, to start claiming some of these profits? Historically speaking, I think the answer would be it's definitely in sort of the upper echelon, but I think they seem to like taking their profits between like 10 and 15%. Now, there have been some massive spikes in XRP's price action, which in the last year, which has made these MVRVs, the upper echelon of MVRV, completely ridiculous. But if you look at historically when that happened, it was basically because the price of XRP explodes in like a 24 to 48 hour span. So obviously average profits are going to explode as well. And then very quickly we move back down. So when you see those spikes, it's also a sign that we might be looking into a short-term correction. So right now we're at about +6%. I think we are inching into that overvalued territory a bit. But we're still not in, I think, a danger zone. Similar to Bitcoin, another push is probably going to put us into a concerning zone as far as, you know, short-term holders liking to take some profits and, you know, being fairly risk off, risk on. For now, it's not showing up. So another relatively, I say, confident sign for XRP, but keep an eye on it. So, okay. Anything else that you want to look into as far as XRP is concerned, Brian?
Supply distribution might be really interesting. You know, I've looked at supply distribution before for XRP, and it gives interesting results. There's a few tiers that have a little bit of price correlation. It is obviously not the same as Bitcoin because XRP's price is about 1/100th the price, or no, even longer, like 1/10,000th of the price. But if we look at something like the one after that, I think. Is it even the one after 1 million? Yeah, so it's the 1 million to 10 million tier. I always find a little bit interesting because they definitely show accumulation on the dips, right? Like right here, going back to December 2020, huge accumulation right here, where they went from owning 5.3% to 5.9%, give or take. So they accumulated about 0.6% of all of XRP's supply here. And then as the price came up just slightly, it dumped. And then they showed a big stretch here from February all the way until July. And then, you know, right around here when we got that first huge uptick in XRP's price, immediate dump. And obviously the price still was able to climb, but not for that long. So this is obviously a 3-year zoomed out perspective. But if you really look at the kind of more intraday perspective for XRP's 1 million to 10 million tier, which is probably the most indicative of what the very large traders are doing and still excluding exchanges, you'll see some pretty interesting things. And right now, at least since September 5th, so give or take about a month, they're showing a sign of accumulation. It's not a huge, strong one, but this is definitely a more positive sign than negative if you're tracking what is happening with these traders. And we're still not back here, you know, at the point where they were owning close to just about, they got over 7% just briefly on June 26th before really dropping off. But if we start to really climb up to, you know, 6.5% and beyond, like we were back here in 2018 and 2019, that's going to be a good long-term sign that XRP's price might start to follow.
All right. I think that's a pretty good stopping point for XRP. I see a few different coins that people want us to analyze. A lot of these don't live on Ethereum. I would like us to look into something that has on-chain data, because this is where we can provide a lot of insights. Heirloom has been the first one to ask us a question, even before I asked people to ask us, saying how's Wi-Fi. So why don't we give a shout out to Heirloom and look into iFi. Sort of a coin that seems to have lost some of its former glory. iFi used to be, I think, one of the most hyped DeFi coins for a while there, before just getting overridden by, meme coins and NFT and whatnot. So the question I think we might want to look into is this coin still alive? What's going on with the on-chain data for iFi? And let's start with something as simple as daily active addresses, I think, just to kind of get a sense of where we are right now. Because last day, for the first, so first of all, this is what the iFi's daily active addresses look like. Like, when you compare this to something like Bitcoin and XRP, and even Ethereum and Litecoin, a lot of these tokens that are seeing an uptick in network-wide activity, you can see that iFi is still struggling. In terms of daily active addresses, it has been fairly flat for a prolonged amount of time. Basically, since the correction, we have seen the amount of addresses interacting with iFi fall down to an average of about 400. Last really 12 hours, there's been a very short-lived spike in daily active addresses. However, I don't even think that's necessarily a great sign. Like, the reason why not is, Brian, if you can also show us the active deposits for iFi, we will notice that there has been an uptick in deposit addresses today as well. So I would bet that the reason why we're all of a sudden seeing even a little bit, just a little bit, of rise in active addresses for iFi is not because all of a sudden people are using it more. I think it's because holders or some holders are looking to take profits. So active deposits it's a metric that tracks the amount of daily addresses that are being used to funnel iFi to known exchange wallets. So this is like, Brian, if you zoom out to the last year, what we will see is a pretty significant spike in iFi's deposits around several local tops, including the one on May 12th, as well as the one on February 11th, January 9th, and so on. So there have been several times in the past where there has inflow of iFi coins to exchanges. And it has coincided with a period of short-term correction. So it seems to me like this latest uptick in daily active addresses isn't necessarily a super clean signal of increased activity. Rather, it might suggest that there's a little bit of an inflated sell-side pressure moving into iFi. That's one thing that I wanted to suggest. Go ahead.
And let me give a quick shout out, since we just talked about that, to our combined metrics here, where we can actually take activity and divide that by deposits and see if there might be some correlation here. Just want to see a quick 30-second glimpse at this because it could be very valuable. It is for many altcoins. We'll just call it address is divided by deposits. Combine. We'll put it on the blank one. And so this is actually the ratio between active deposits divided, or addresses divided by deposits, I should say. And there's a little bit, definitely, like, this is the biggest spike where we saw address activity over deposits. It came with a decline. Usually it's a good thing when spikes happen. So I guess
I think, isn't it, so the lower it is, that means that the less there's less daily active addresses compared to deposit, right?
Yeah, and you know what, it would actually be better if I do it the other way around, where deposits is the numerator. So thanks for that correction. So I'll go deposits divided by active addresses, combine. We'll just call it anything. Combine, put it back, So now the higher the better. The higher the spike is, the more likely, the more deposits are happening within those active addresses. So yeah, this makes a little more sense. We have the big spike here right before the correction, another one here indicating
contextualization spike, yeah.
Exactly, and then another one right here, right at the correction. So this can be a really nice way to look at not only just the overall address activity, but what's going on within that address activity and how much of it is related to addresses that are essentially deposit addresses, implying they are planning to be sold off.
Right. Okay. One other thing, if you look at exchange inflow for iFi, there is a little bit of an uptick today as well. Might suggest that there's a, like I said, given the fact that the active deposits are rising, it also might suggest that some holders are looking to take some profits today. I don't think this is anything super concerning in the long term for iFi. I'm just talking about it from a very short term perspective in terms of analyzing what is the strength of iFi. Elevated sell side pressure might stand in the way of the sort of a strong uptick in iFi's price in the short term. Obviously, remains to be seen. Another thing, let's look into, Brian, MVRV ratio for iFi because it is pretty high. Not really. I would just only look at the 30-day MVRV simply because iFi is a relatively young coin. It's only been alive for like a year and 2 months. So generally speaking, MVRV ratio is best used for coins that have a lot of historical data. That's why I think using it for Bitcoin, Ethereum, XRP, coins where you can see like 3 or 4 years of average behavior of a certain holder category is super valuable. Still, with the 30-day MVRV, we can see that we're at about plus 15%. Historically speaking, that's in the upper band of the average holdings of iFi holders. If you look at where we've bottomed out, we've also bottomed out at a sort of a resistance, support level of about minus 23, 25%, suggesting that this was potentially an interesting time to accumulate iFis, generally looking at historical trends, right? So this was a few weeks back. Now we're well into positive, plus 15%. I would say similar to Bitcoin. There is a world in which this metric can prolong its stay in the upper band for a couple of days. But it's generally pointing to a rising potential for some holders to start taking profits, especially when you combine it with the active deposits starting to pick up. There might be, I'm just saying might be, some amount of elevated activity in terms of iFi sellers. So whether that then leaves the open question of how strong the response is going to be from iFi bulls at these price points. So that's one thing that I would sort of keep an eye on for the time being. I'm looking at its social metrics, nothing really interesting happening, mostly just flatness. It doesn't seem like a lot of people are actually paying attention to it. One thing that we might want to, we do this quite often, but one thing that we might want to do, Brian, is we just show 500 daily active addresses, right? How high is that relative to the rest of the Ethereum ecosystem? So we can go through to our screener and we can select all assets that have more than, let's say, 500 daily active addresses in the last day. Actually, iFi is probably not even going to be there because it's only just gone above that band on the rolling 24-hour daily active addresses chart. So it's not even like for a full day, it hasn't been there. But let's just look at, generally speaking, how many addresses fit into this category. So
we're looking at 500 over the past 1 day, correct?
Yeah, but what we also want to do is we want to put a filter that only looks at the coins that live on Ethereum. So if you go up a bit.
ERC20s?
No, so you can, I mean, that's, I think that doesn't include all of them. So just delete the active address sort of query, the one that you put in the search bar. Sorry.
Got it. I see. Yeah. I see.
So then we go to market segments. It's under financial market segments. Choose a segment, Ethereum. There we go. So that's going to show us only Ethereum-based assets. And then we'll look into daily active addresses.
500 1 day. Perfect.
Yeah,
so we got 39 assets.
There we go. So I mean, it's the 500. Like if you really look at it, especially because IFI used to have massive amount of activity. If you sort of look at what happened during the first couple of months, there was an average of like 2,000 addresses easily on a daily basis when DeFi was the hot thing in town. Currently, 500 is relatively low, and IFI is struggling to find a new sort of adoption in terms of daily network operations. However, on a protocol level, I know that IFI or Yearn Finance is still doing very well. And generally speaking, this 500 daily active addresses mark still puts Sci-Fi in a decent company of some of the most used coins on Ethereum. A lot of network activity has dipped on Ethereum over the last 2 to 3 months almost, but really the last month because of high fees. You can blame NFT projects for that mainly. The fact that fees have been between like $25 and $40 on average for the entire month of September. So there is definitely less of an interest for like low ROI interactions. This includes any Ethereum-based coin. Because it's just too expensive. So you're not moving coins unless you absolutely have to. So of course there's going to be less of a daily interest in or sort of daily interaction with a lot of these coins. That doesn't necessarily mean that the coin is dead. It does, however, mean that the Ethereum has some problems with scalability, but it's not, tell me something I don't know. So overall, there aren't like many clear signs that IFI, at least on the few metrics that we've been looking into, and I do want to look into another coin before we go. No clear signs that IFI is showing bullishness similar to something like maybe XRP from a few metrics that we've been keeping an eye on. But it's still in the upper band of coins. Putting it like any coin that is within the top 40 of Ethereum, it's not doing bad for itself. So yeah. All right, we've got a few other requests that have come alongside. I think a few people talking about Ethereum, and I think it's a good idea to look into Ethereum before we end the call. We've got maybe 5 to 10 minutes. Let's just do a quick update on ETH, because ETH has also seen, and I think this is a quite interesting sign. If we look at let's start with the network circulation. So generally speaking, Ethereum's NVT is now in the orange band, which Brian, correct me if I'm wrong, basically means a medium sort of neutral territory in terms of the market valuation of Ethereum relative to the amount of tokens moving on the blockchain daily, right?
Yeah, it's not quite bearish, but it's actually between bearish and neutral. So 2 out of 5 on the with 5 out of 5 being bullish.
Well, one thing that I would add to that is let's look into daily active addresses for Ethereum, because I've been checking out this rise in daily active addresses for Bitcoin this entire week, and I was pretty happy. But all along, Ethereum has been kind of just not following. There has actually been relatively low interest, on a network level for Ethereum. Obviously, I think one of the main reasons why is not because people don't like Ethereum, or not even because there's a lot of activity on other blockchains and a lot of quote unquote Ethereum killers. It's, I think, mainly because of the fees. Fees have not dropped. They've actually stayed roughly the same, or around $25 on average. But we are addresses interacting with Ethereum start to pick up again. So they've peaked at around, I think, 650,000 addresses, which is quite damn high. It's not its peak, its all-time high, but generally speaking, I think it's moving in the right direction. So that's one thing to look forward to. It's only been up there for like 24 hours though. So one thing to keep in mind is that it's almost certainly going to drop over the weekend, and then, which is fine. And then the question is, what is it going to do next week? Is it going to fall down under the pressure of all those fees? And generally, sort of, there's a level of disincentivization to interact with the Ethereum network right now. Or are we going to see interest or daily interaction with the Ethereum token continue to grow despite massive fees? So that's, I think, going to be an interesting, at least on the L1, right? That I think is going to be an interesting thing to keep an eye on. One other thing that might be a little bit concerning is once again Ethereum's MVRV 30-day ratio at the moment is at around 11%, which isn't yet in that like upper zone Ethereum, similar to Bitcoin, seems to like to peak between 15 and 20%, 15 and 25. So we are a little bit, we've got a little bit room to grow still before we hit a danger zone for Ethereum's short-term MVRV. Its long-term MVRV ratio, however, is at around plus 60%. So if you look at historically how high that is, it's pretty high. Like that means that on average, all addresses that have acquired Ethereum in the last year, they're plus 60% in their initial investment. So the question is, are they likely to start claiming some of their profits? I think historically speaking, the answer would be probably yes. That's certainly a concern. We're nowhere near historical lows. I'll tell you that much. We're certainly in the upper zone. So there's a little bit of potential scare on that side of the aisle. As far as on-chain, as far as social data is concerned, actually, Ethereum is doing similarly to Bitcoin, which I think is quite interesting. So social volume and social dominance, all of the metrics that are telling us how many people are talking about Ethereum, they're both down on the week, which is interesting given the fact that, similar to Bitcoin, Ethereum has been showing relative strength. And then the average sentiment towards Ethereum has picked up or has spiked very quickly, I think on October 6th, similar to Bitcoin, and now it's already bearish. So both Ethereum and Bitcoin had like an instant or sort of immediate uptick in general sentiment towards the coins, but now they're back into a sort of neutral to bearish territory, which I hope they remain for the foreseeable future, because this is like, if you look at what happened back in May, we've had like around all-time high for Ethereum, there was a pretty significant uptick in general sentiment. So these are some of the things that I would like to see remain pretty low for ETH for the time being. Also, speaking of potential sell-side pressure, it is worth noting that the supply of Ethereum on exchanges hasn't really seen any significant uptick. So one thing to keep an eye on is what is the amount of Ethereum moving to known exchange wallets. So if we look at the total supply of Ethereum on exchanges, it has picked up slightly on October 6th and October 7th. But over the last 24 hours, it's actually been fairly flat. And generally, the trend has been down. So we're not seeing, at least for the time being, we're not seeing any concerted network-wide effort for people to start selling their Ethereum coins, which I think is sometimes in the past has been a prerequisite for a local top. For now, we're still not seeing that level of sort of bearish, sort of sell-side consensus, I guess you could call it, right? So overall, I think Ethereum is looking a little bit worse than Bitcoin, specifically because it has been sort of relatively underwhelming in terms of on-chain activity. Like Brian showed, NVT ratio, for example, suggesting that while its network operations have been picking up, they still have been lagging compared to its price action, as well as the fact that MVRV, both long-term and short-term MVRV, is sort of moving into that upper band. I think there are signs for concern. I would look for the general signs of increased sell-side pressure for Ethereum. So active deposits, number one, to suggest that there is a rise in sell-side pressure on a daily basis. Like if you look at active deposits for Ethereum over the last year and just kind of look at where they have previously peaked, they have peaked around local tops and local bottoms, suggesting either people are selling Ethereum at tops and there's not a whole lot of interest to buy Ethereum at those points. So Brian, let's just move active deposits into a daily interval to see it a bit more clearly. Yeah, and let's take last year of data maybe. There you go. So this is what happened back in May, massive uptick in active deposits. And back in September, there has also been a relatively significant uptick in deposit activity when we started to pump. Currently, or at least like in the last couple of days, there has been a little bit of an inkling of increased deposit activity, suggesting maybe on a daily basis there's a further interest in some addresses to take profits. But in terms of supply and exchanges, we're not seeing massive changes. So for now, I wouldn't be too concerned about this. It seems all within like reasonable trends. So yeah, there are, I think, signs to be more bullish about Bitcoin at the moment from an on-chain perspective than Ethereum. But I'm not at the very least seeing any like massive red flags. So I said before the call to a couple of people that I'm going to be cautiously optimistic on this call. Obviously, it's very difficult to say where we go from here, especially as we sort of approach all-time high levels. We're always moving into an uncharted territory. The only thing that I can really say is that from an on-chain perspective, network-wide perspective, Bitcoin is doing the things that it needs to do. There are more and more people interacting with the token on a daily basis. Whales are finally, slowly but surely, hopefully, starting to acquire more Bitcoin and accumulate more Bitcoin. The crowd is still not experiencing a bullish consensus, so there may be a bit more room to grow. And Bitcoin's MVRV ratio has maybe 5 to 10% more to grow before it's clearly overvalued. So those are all like potentially decent signals for Bitcoin. Doesn't mean that it doesn't crash from here on out immediately, but I think these are the things that make me cautiously optimistic about it in days to come, Brian.
Yeah, nothing really to add. I think Dino summed it up very well. It's the past week has really shown some signs of some price dominance for Bitcoin, really for the first time in a while. I think that there's a lot of polarization on altcoins right now, and that has subsequently led a lot of people to go with the relative safe haven, which is Bitcoin. So with these on-chain metrics that we've shown today, it's indicating that that is justified, right? With address activity going up, circulation going up, whale activity slightly up. This all indicates that this wasn't a fluke for Bitcoin. And we're going to have to see whether, now that we're hitting these marks that are close to the all-time high relatively, 54 to 55K is only a little bit off of that 64K level, which I believe it got to back in April. Now we see how people react, whether this is kind of like FOMO time once again, which would be bad because FOMO equals the crowd jumping in with the expectation that it's going to surpass all-time highs, or if they're all trying to take profit right now, which would be good for the bulls who are staying strong and going against the crowd expectation that the price is going to drop back down.
I think that's a good way to end the stream for today. Guys, first of all, sorry for no camera today. Our OBS has been kicking our ass the entire day, so we didn't want to risk not having a stream at all or the stream completely bugging out and maybe ending on itself, because we wanted to show our faces. So we'll have obviously our cameras back on for next week. One other thing that I want to say for everybody that is considering being a Sandbase Pro member that's not already a Sandbase Pro subscriber, next Wednesday, so basically what is that, 5 days from now, at 6 p.m. Central Eastern Time, we are going to be doing an exclusive webinar for our Sandbase Pro subscribers on how to analyze market sentiment with our data. So that means that we are going to be giving a in-depth look into our social metrics in particular. So social volume, social dominance, social sentiment, as well as doing several back tests for our social data that we have previously not done. So we're going to be doing all of that live. If you want to be a part of it, this is going to be exclusively available for Sandbase Pro subscribers. So I'm going to share a link to this in chat so that people can see where they can sign up. So you go to this page, you sign up to the, you leave your email, and you'll get an email back letting you know that on next Wednesday, 30 minutes before, that the webinar is going to start. You'll get a link to the stream. So if you're considering and you're still on the edge about being a Sandbase Pro subscriber, outside of all of the metrics and templates that you can get with our Pro subscription, we will also be doing these Pro webinars every month. So make sure to join us for next Wednesday. So yeah, that's going to be it. Thanks a lot for today, guys. Let's hope this continues. I mean, at least for Bitcoin, it's showing some strength. Hoping to talk to you guys next week at the 60K mark. Obviously, there are no guarantees, but here's hoping for it. So Thanks, everyone. We'll be back in a couple of days. Like I said, Wednesday. See you there.